So here's the deal with Elf. Okay, listen. The sales increased for the company 9% last quarter, right? Kind of a slow, sleepy quarter for Elf. Elf's usually a strong, double-digit growing company. They had a very tough comp to comp against. They had all the tariff drama to factor in. They had some retailers that probably under-ordered, in my opinion, right? Based upon kind of looking at some of that trending data. So here's the deal, though. The road deal's closed now, right? So this upcoming quarter will be the first quarter that the numbers start to hit for Elf. Oh my gosh. Oh my gosh. Elf's about to show skyrocketing growth rates, right? Once again, just like Celsius has. So the thing you got to understand that's going on with Elf right now is people are front running that because they know Elf's growth rates are about to skyrocket again. Plus, you're going to likely get the core Elf brand start to post some very impressive numbers, probably Q4, starting in Q4 of this year, and then especially going into 2026 because the comps will get a lot easier. They've been dealing with brutal comps for the past, I would say, several quarters, if not the past year, and the comps are going to get a lot easier because they're not going to be showing these ridiculous growth rates, right? So you have easier comps, Elf brand getting back to nice growth, and the road deal going through, the growth rates are going to likely skyrocket for Elf, okay? So when it comes to Elf, here's a stock that topped a little over $200 back at the beginning of 2024, okay? Here's the deal. The stock's likely coming for 200 plus again in 2026. And this is a rare company where when you look at the makeup industry, you look at the beauty industry, right? You look at the cosmetics industry, where can you buy a stock that is going to be having, extremely strong double-digit growth like Elf's going to be reporting as soon as next quarter, right? And then, just insane growth rates after that for the next many quarters. Where are you going to get another opportunity like that? It doesn't exist. It doesn't exist. Like you could look at all the public companies you could possibly invest in the cosmetics, makeup industry. Where are you getting those sorts of growth rates? It doesn't exist like you're going to be getting from Elf. You're going to be seeing Elf report 30, 40, 50% growth rates. And you're not getting that anywhere else. There's just not that sort of opportunity out there. The only other exciting opportunity, in my opinion, for the next few years is Estee Lauder EL. But EL is more of a story around getting back to revenue growth. It's a turnaround play and getting back to their margins are going to likely increase dramatically over the next year or two. Profit's going to increase dramatically over the next year or two. But it's not like even Estee Lauder is going to be reporting 30 and 40% revenue growth numbers like Elf will be reporting, right? So you just don't have those sorts of exciting opportunities. You got one opportunity. It's Elf. So what happens when you have that? What happens with the market from the stock price perspective side, right? Here's what happens. You start to have scarcity, right? Because it's a scarce thing. Like where else are you going to get that? It's very scarce. You can't get another Elf. It's not like they get another Elf where it's like, oh, there's this other cosmetics company right here I can invest into that's growing, 40% revenues, and there's this one over here. There's not like there's this one option. So it's scarce. And then you have the shareholders say, why do I need to sell Elf? Well, why? When this company has all the markings of being the next cosmetics giant, one of the biggest cosmetics companies in the world, we know now Elf, what they're doing essentially is they keep growing their brand massively, right? They keep expanding their revenues, their market share, all those sorts of things, and then they can produce great cash flows from that. Then what can they do? They can either take out debt or use existing profits to go fund acquisitions of other hot brands. And they grow even more powerful. And when they grow even more powerful, they can go buy more brands and more brands and more brands and grow even more powerful and even more money, right? And eventually you become a conglomerate, which is what Elf's likely on the trajectory of becoming a conglomerate company, of owning a ton of different brands, right? And then someday, you become so big that even when you make acquisitions, it doesn't really help your revenue that much. That will help in Elf eventually. But that's probably, my guess is that's not until the late 2030s. Elf could keep playing this game for the next 10 years of growing revenues bigger, profits bigger, cash flows bigger, buying other brands, bringing them in-house, expanding distribution. That increases revenues, profits, which allows them to... Eventually, Elf will get so big that, they'll make an acquisition and it won't even be very material to the business model. But that's not anytime soon. Like I said, that's probably late 2030s we can talk about that game, right? And by that time, Elf, who knows how big the company is. It's probably, it could be a $50 billion company by that particular time, if not bigger, right? So Elf's likely on this way to 200 plus, probably 2026. But it's possible it could hit it this year, but I don't know. We'll see. Okay. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Estee Lauder EL stock. So stock up over $30,000 on the public count. $5,800 down today though on that one, right? So we lost some gains in regards to that one. That does not include dividends received from the stocks. It is a dividend payer. So what's the deal with Estee Lauder EL, right? You know, I really like this company. They own a lot of the best brands in the cosmetics industry. If you look at their brands, I mean, there's so many of the high-end brands they own, okay? So you understand the game and the guide, okay? So the game, the company provided a financial outlook for its fiscal year 2026 because now they're moving into their fiscal year 2026. You got to understand that about Estee Lauder. You know, all companies had their fiscal year at like a different point. And so now Estee Lauder is moving into their fiscal year 2026, okay? They're projecting earnings per share to range between $1.90 and $2.10, so we can call it $2 at the midpoint, well above analyst consensus estimates of $1.48. Now, my opinion is the $2 midpoint there is low. I think that's actually very low. Based upon how I see revenue coming back in the fiscal year, I think it's a low number. And based upon some of the profitability trends I'll show you in just a minute from cost-cutting measures, I think it's actually really, really low. Company expects sales to reach between $14.61 billion and just over $15 billion, which was also quite a bit ahead of where analysts were at. You know, so their midpoint here for Estee Lauder is around, we can call it $14.8 million roughly, or $14.8 billion roughly, right? And analysts are about 14.3. So Estee Lauder is about 500 million ahead of analyst forecast here for their fiscal year. So that's definitely positive. And I think this is a huge part of why the stock ended up bouncing back as the trading date went along today, right? Now, in its fiscal 2026 guidance, Estee Lauder has reflected several key assumptions. The company anticipates global prestige beauty growth to fall between 2 and 3%. Additionally, Estee Lauder plans to implement stricter inventory controls and a substantial reduction in discounts to better align retail and net sales growth. Now, this is where things get really interesting, okay? In regards to China. Listen to Estee Lauder in China, okay? In terms of regional performance, Estee Lauder is forecasting mid-single-digit growth in mainland China, signaling early signs of market stabilization. The company also expects a modest recovery in its global travel retail business, particularly in the first half of fiscal year 2026, which would be the next couple quarters here, driven by improved shipment levels in Asia travel retail. However, the company cautions the volatility in the sector, including weak conversion rates, could temper overall performance. Cover your bases. Excluding mainland China, Estee Lauder is projecting low single-digit growth in most other markets, with year-over-year growth rates improving compared to fiscal year 2025. For the first quarter of fiscal year 2026, the company expects low single-digit decline to slightly positive growth. That's for the first quarter. So basically kind of like we can call that like a flatlining of the business, essentially in the first quarter, which will be the next quarter they report here. Driven by strong results in global travel, retail, and solid performance in mainland China. The gains are expected to offset more moderate declines in other areas of the business, okay? Now, the important thing to understand about this, what is the big takeaway? Here's the big takeaway. Estee Lauder is expected to get back to growth. That's massive. Okay, and I'm going to show you in just a moment why getting back to revenue growth is going to be so insane for the company's margins and profitability in just a moment, okay? But that's what I need to hear. I need to hear a management team confident the company will be growing again in 26, and we've reached a trough and a bottom in this business model, right? Now, when we look at the balance sheet here, cash and cash equivalents, $2.92 billion versus $3.39 billion, right? Other assets, they had a major kind of like write down here, about $1.1 billion. Long-term debt, slight uptick there, but not much there. One of the positive things is current debt is almost non-existent from $504 million at the same time last year. Total equity on the company went from $5.3 billion to $3.8. That really reflects the tough year it was for Estee Lauder. I mean, it was a most brutal year for the company in regards to profitability, everything across the board, really. I mean, probably since I got in the stock market, like literally, like since I got in the market, 08, 09, this was probably the roughest year I've ever seen for Estee Lauder. It was a brutal year for them to go through, essentially. Okay, now, in regards to the income statement, right? I mean, everybody expected this. Net sales down 12%. One of the positive things is cost of sales actually fell 13%. Now, gross margin picked up. Guys, gross margin just went up with net sales down 12%. What do you think's about to happen to gross margin and the margins in general of this company as they start growing revenues again here in fiscal year 2026? Oh my gosh. Gross margins, operating margins, every margin across the board is going to absolutely skyrocket likely for this company. Now, additionally, if you look at selling general and administrative expense, they are able to bring that down 5% year over year. Once again, this is one of those things like watch as revenue starts to increase again. When you got your SG&A going down, ooh, that's big, okay? They also had a restructuring and other charge here of $106 million and an impairment of other intangible assets of $425 million. So these all hit like the profitability numbers in a major way because they add to the expense profile. But all these type of things are usually more like one-offs. This is more like stuff that's happening in 2025 that we shouldn't see recur essentially in 2026 and beyond. So all these like one-offs that kind of like kill the profitability right now, that should all be basically going bye-bye. And so what we're going to watch emerge for Estee Lauder over the next 1 to 2 years is an incredibly profitable company. And we could be looking at an Estee Lauder that turns into the most profitable Estee Lauder we've ever seen in the history of this company over the next 2 years, essentially. This year we're going into now, this is like the first step of that, essentially, right? So that's kind of wraps up kind of Estee Lauder there. Now, where do I see the stock price going over this next 36 months? My opinion on where the stock price is going, I believe this stock is going to the $200 to $300 range in the next 36 months. Do I think we take out the old all-time high, which was $370? I don't know about that. It's possible, but I'm not going to get that confident in Estee Lauder yet. Okay, I got to see a lot more revenue growth. I got to see them if I could see them get back to strong double-digit revenue growth, that would give me the confidence to actually think the stock's probably going $370. But for now, I have my doubts about that. Because I'm kind of like expecting them to get back to like strong single-digit revenue growth, right? Which is going to produce incredible double-digit profitability growth, I think, year after year for the next several years. So I think we're likely headed to the $200 to $300 range. The bottom's already in for the stock. It was a long in for the stock. We hit that bottom in the 50s, right? And that was it. And so you got to understand the stocks, as I've explained this to folks many times, okay? And this is very important you understand this for turnaround plays. The stock prices always bottom way before the business bottoms, okay? And it's like, before you get that concrete evidence of like, oh, the business is bottom, it's already bottomed, the stock. So for instance, we're not going to have concrete data that the business has truly bottomed until about 3 months from now. 3 months from now. But the stock price bottomed about 3 months ago. So think about this for a moment. The stock price bottoms about 6 months before you get the concrete data. And the amount of times I've seen this happen, guys, is all the freaking time. I've been in this market like 17 years now. The amount of times I've seen a stock bottom 6 to 9 months before you get that concrete data about the business bottom, it happens all the time. And it's exactly what's playing out here with Estee Lauder. So, people think like, oh, let's wait to get the concrete proof. You can do that. And, there's nothing wrong with that other than you're going to miss out on ridiculous gains. Because listen, 3 months from now, I mean, yeah, of course, the market could get hit or something like that over the next 3 months, but there's a possibility that Estee Lauder is $100 plus, well over $100 plus, by the time the concrete data comes out. So it's like you could have paid 50 something a few months ago, or you can pay $100, a double up of the price. You say, well, at least I got the concrete data, and true, you just missed out on a double up. That's an important thing. This game would be so much easier if you could just wait until you get like the all clear sign of like, oh, I can invest in a stock or I can invest in the market, and like now's the perfect time. Oh, it'll be so much easier. It doesn't work like that. It doesn't work like that. You've got to be able to forecast things that are going to happen in the future, likely, right? And then place bets. Okay, now that brings me to Nike. Estee Lauder reminds me so much of Nike. So much of Nike. Like both these companies remind me so much of each other. The stages they're at and their turnaround plays and everything like that, man. And I think we'll be fast forward 24, 36 months from now, even 12 months from now, and people will look back at Estee Lauder and Nike and be like, we should have placed some chips out there on the table on those two brands. Like, you don't want to go against those two brands. Anybody that's gone against those two brands, over the past 4 or 5 decades came up on the wrong side of that. And I think that's going to be exactly the situation. People are doubting Estee Lauder, people are doubting Nike. And I think even within 12 months, they'll be looking back and be like, dang, man, we could have got Nike at what price? We could have got Estee Lauder at what price? Like, why did we stay on the sideline? Okay. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Trade Desk, next one up here. Trade Desk all the way down to $50, down another 6.6%. It's an intriguing company, very intriguing company. A large company now in the advertising space, and really helps companies, basically buy advertising space on the internet, digital media in general, right? Other places as well. And they're phenomenal for being able to use data to hopefully make you make a lot more money. They have a new product that's come to market recently that's supposed to help TTD make a bunch more money and their advertisers make a bunch more money as well, right? Which would be beneficial because no different than Meta. Like, how does Meta make so much money? Meta has the ability to run ads to massive amounts of people, and they have all this data, so hopefully they can get you the best ROI possible, right? Through Facebook and Instagram ads. And so TTD can do this all over the internet, all these different services, things like that, okay? Now, in regards to TTD, here's a deal. This came out today. Walmart amends ad tech agreement with Trade Desk, which might benefit Amazon. Ad tech firm Trade Desk, TTD, could be at risk of losing one of its most valuable clients, Walmart. TTD shares were down. According to the report by The Information, citing sources, the retail giant last year negotiated its agreement with Trade Desk and now has the option to use ad buying platforms of other firms. Under the previous agreement, which lasted for 4 years, Trade Desk was the exclusive technology provider to advertisers buying spots on the web using Walmart shopper data for targeting. The report said the move might benefit direct rival Amazon, which has recently ramped up its efforts to handle the sale of ads across the web and has been offering advertisers incentives to woo them away from Trade Desk, right? And so this is once again, Trade Desk and Amazon are going right at each other now, and that's the tough thing with Trade Desk is oh boy, I don't want to fight Amazon. That's a tough fight, right? Sources told tech news outlet that Trade Desk's high fees frustrated Walmart, which led them to renegotiate the partnership. Okay, According to sources, Trade Desk charges Walmart advertisers in double digits to use the technology. Now, here's where it gets scary if you're a Trade Desk shareholder. In comparison, Amazon charges advertisers only 1%, which was recently brought down from 5 and 7%. What? That's insane. Like, if this is accurate, that's insane. You know, you got the Trade Desk charging double digits, and you got Amazon saying, we'll do 1%. That's like the famous Jeff Bezos quote right there. Your margin is our opportunity, right? Like, that's, what? That's ridiculous. A Trade Desk employee told the Info that Walmart jealously guards its shopping data to prevent it from falling into Amazon's hands. That makes sense. Like, if I was Walmart, I wouldn't want Amazon to have my data. Like, that's just not ideal, because Amazon is a direct competitor on the e-commerce side, right? The employee said Trade Desk has built a separate version of its technology for Walmart on Microsoft Azure. Albeit, a large portion of its business runs on Amazon Web Services. Another person familiar with Walmart's thinking said the retailer could also potentially acquire an ad buying platform or possibly build its own ad buying platform from scratch. So this is a fascinating matter. You know, in regards to what does it mean to Amazon, I wouldn't get too excited about it from the Amazon perspective. As an Amazon shareholder, is a major position for me. Like, I'm just like, okay, like, if they're going to use Amazon for a bunch of this, like, great. But at the same time, Amazon, the business is so big, it's not like this is going to massively change numbers or something for Amazon. Like, the numbers are too big at Amazon now at this point in time, right? But if you're a Trade Desk shareholder, like, this is something that's got to freak you out, because if Walmart's going to start using Amazon, right, or maybe do some in-house stuff, it's going to take business away from the Trade Desk, which is going to hurt future years' growth rates. We're talking 2026, 2027, 2028. So when you run your projections and your numbers on 1000xstocks.com, like, maybe the growth rates aren't quite there the way you thought they were there, right? And that's something you got to consider here in regards to the Trade Desk, right? Now, you look at the charts feature on 1000x Trade Desk. I mean, it's phenomenal. Like, the growth has been amazing, right? It's expected to continue to be amazing, but we don't know what happens with this whole situation. The margins look very good. Gross margins, 80%-ish range, right? Net margins have continued to kind of pick up from net margins back here at, the negatives to then 4% positive. Look at the latest quarter, 12%. The Q4, in this sort of business, net margins are always going to be the highest end. Net margins in Q4 came in at 24.5%, which is incredible for a business like this at the stage they're at, right? The earnings per share is supposed to take off like a rocket ship over the next few years, right? And the thing that's a little scary here is if they do have to really respond to the Amazon competitive threat, right? Then what's going to have to happen is Trade Desk is likely going to have to do what? They're going to have to lower the percentage they charge companies to compete directly head on with Amazon, which then would hurt margins. So if the Trade Desk might have some hard decisions to make, whether they want to maintain margin and have revenue potentially falter, or go after revenue growth, go after market share, and then potentially have margins hurt for the next few years. So it's a serious matter in regards to Trade Desk. And so the Trade Desk is a very interesting stock, but I think this is a very serious matter for the company. This is not something that's impossible for them to manage through, but it's a serious, real deal Holyfield. Like, you've got Amazon trying to way undercut you, and especially if you're anything CPG related, I think that's a real strength for Amazon. So I don't know, man. Like, I think the Trade Desk is like a really interesting stock to me, but there's definitely risks that come along with this. By the way, there's some new features on 1000xstocks.com. We have current assets and current liabilities, and now we have our cash, marketable securities, and debt feature as well. We just got that up in the last 24 hours. So 1000x members, I hope you guys enjoy that, baby. For everybody that belongs to 1000xstocks.com and got your membership card, once you join us on 1000xstocks.com, we give you your Steel membership card in the mail. You put that baby in your wallet and you're epic.